Assalamu alaikum wa rahmatullahi wa barakatuh. I welcome everyone here. Today we will have the second topic in accounting information system. It's about the transaction processing system TPS. If you can recall, last week we discussed the account information system in general, and then we say there is a two subsystems under it. One is the management information system, MRS, and in the other side is the accounting information system. And we talk in details about the accounting information system, that there is a three main subsystem under the accounting information system. uh, uh, we start with TPS, and then which is the processing of the transaction system, and then we have mentioned about the reporting other two systems, which is the internal reporting system, which is the management reporting system, and then the other system is for external reporting system, which is the FRS or GLFRS. You can go back to check that. So today we'll focus mainly in the transaction processing system, TPS. An overview of transaction processing. A financial transaction, we can call financial transaction when there is an economic event that affect the assets or equity or the liability of the company. So it can be reflected and change the account balance. And it can be measured by monetary or the ringgit terms. Under the transaction cycles, as mentioned in last week, we have three types of transaction cycle. The first one is expenditure cycle, which cover all the activities of cash flow out from the company, either for the acquisition of raw materials, or any purchasing for any equipment to the company, buying properties, purchasing furnitures, and so on, and also paying the salary to the staff and labor. Other than that, being the tax also considered one of the expenditure cycle. The second cycle is the conversion cycle, or we call it the production cycle. So conversion mean we convert the raw materials the items into through the process of production to a finished goods that we are going to sell. So conversion cycle is the cycle composed of the production system and the cost accounting system. Then the last one is the revenue cycle. Revenue cycle is the cycle composed of sales order, processing, and cash receipts. So we will have separate chapters for each one of this. So we will discuss in details. Just here we need to know the abstract about that, about those items, about those type of transaction cycles here, and then later on we will discuss in.
Let us see here the overview of the relationship between the three transaction cycles. We have, as we said, we have the expenditure cycle, and subsystems under the expenditure cycle is the purchasing and account payable cycle, cash disbursement, payroll, and fixed assets acquisition. And in the conversion cycle, we have two subsystems. One is production planning and control, and the other one is subsystem is cost accounting. And under the third one, revenue cycle, subsystems is sales order, processing, and cash receipts. So now let's see the relationship between those three cycles. So the expenditure, when we as we said, is about cash flow out from the company to either buy raw materials or physical planet and then or pay the labor. So all of this will contribute to the conversion cycle, isn't it? So raw materials, labors, and physical plants will contribute to the conversion and production process, and that will produce the finished goods, the output of the conversion cycle. This finished goods will be the input of the revenue cycle. And when the revenue cycle, we have sales order processing. When the company receive a sales customer order, then they ship this finished goods to the customer. They will receive the cash as an input from customer, and this cash will also be the input of the expenditure cycle. So we in here we need to know the holistic relationship view of the three cycles, so we are not isolated. So the system, the accounting information system or the software, we should understand this in and out flow of the relations between the three cycles, even though the system will record and process or each one of these transactions under each expenditure cycle and subsystem cycle separately. Okay. Now the question is, so how we start recording the transaction within this cycles? So let's say we have revenue cycle transaction, or we have expenditures transaction. So how we start record it? Okay, so if we want to understand how we start recording the transaction, as we say, we should first recall the accounting record in the manual system. And before that, let's recall some accounting terminologies used with the record, manual record in the previous accounting, financial accounting subjects and so on. Okay, so source documents are used to capture and formalize transaction data needed for the transaction processing. So the source document is the supporting document for to process the transaction process. Then we have product documents, which are the result of transaction processing. So when we process the transaction, it will come out with product documents. Last one is turnaround documents, which are the product documents of one system that become source document for another system. So an easy example of turnaround documents is the invoice, the bill, electricity bill. If you see in the electricity bill, if you go and pay, if you want to, let's say the post office to pay, so they will collect the money and then they will cut that bill and stamp in one side for you to be supported document. So this one we call turnaround document. It means this document is in the first place is invoice of the service of electricity, but also it's turnaround document as payment document for the customer when they pay. So that's what we call turnaround documents. Then we can recall also the journals, which are the chronological record of transaction. Let us have an example to have clear picture about those documents type and also the process of recording in manual system. So we take the revenue transaction or sales transaction. So we start by having customer order. sorry, we start by having customer order. So we process this data of customer order. For sure, we will have certain data about this customer order. First, it will be the quantity and the description of the order, and also the name and address of that customer. Then we will produce another source of document, which is the sales order. When we produce this sales order, this one we call it producted or product documents, whereby the customer order is considered a raw document or supporting document of the sales order. And then we process the sales. We send this sales order to the sales system. The sales system, they will send an invoice to the customer. And this invoice, in some companies, they will use it to turn around as a turnaround document. So it will consider a bill or invoice to send to the customer, and also it will be used as remittance advice to be used internally as a supporting document of this transaction. So if you see here, when we send the bill to the customer, and when the customer send the check to receive the cash for payment, for receiving the cash from the customer, so we will use the remittance advice as supporting documents, which is turnaround document from the previous cycle to support the transaction of cash received system. After we understand the flow of the documentations and the type of the documentations, the source document supporting or source documents, and also we mention about the product system documents, and we mention about turnaround documents. And here we have three categories of or three process of recording the transaction. So we take the example of sales order. So first we have the events, and the economic event is customer order. To record it or to capture this transaction, we need to have to produce or to have product document, which is the sales order. Based on the sales order, we will have the recording final stage, which is we will record the transaction in the sales journal. So this is how the sales journal looks like. So we have here the customer's name, invoice number, we have the accounts number, and sometimes we will have this based on the account chart, and then we will have the debts and credit. Okay, so I think it's a basic concept of accounting and double entry. So it will be recorded in the manual system based. Here we have the general journal. I believe everyone is have clear picture about the description and how if you can recall, after we finish from updating or recording the transaction on the journal, then we need to post the balances of the transaction to the classified or to the identical group of the account. So let's say the sales transaction will be recorded in the ledger or the T account of the sales and revenue. So ledger is a book of account that reflect the financial effect of firm's transaction as they are posted from various journals. And various journals, as we mentioned just now, is the general journals we discuss how we get them, how we record in them. So by the way, this is all the manual systems is all revision for you. I believe you are year 3, so you are mastering all of this. It's just to recall and link it to the recording in the accounting software system. Together, the accounting records provide an audit trail for tracing account balances contained in the financial statement back to the source documents and event that created them. So by doing this chain of recording based first based on the economic events, then we capture the financial transaction, then after that we record the transaction in the journal based on that source of documents. After that uh, we do posting to the ledger, then we prepare the trail balance, and then we do the closing account. After that we do the financial statement as the accounting cycle we studied before. So this chain of recording and so on, and related chain, it will give advantage or help to do audit trail, so you can trace account balances from financial statement down to the supporting documents and events. Also, you can watch from supporting document to the balances of account and record. So the relationship between the subsidiary ledger and the general ledger, because we have subsidiary ledgers, as I mentioned. Let's say under the account receivable here, we have customer Hobbs, Johnson, Smith, Harvard, and so on. So the total amount of those customers, total amount of account receivable, it will be transformed to the general ledger, which is the balance of the account receivable. And from this, as we recall, this one will shape the balances in the financial statement, the balances in the general ledger. Okay, so subsidiaries ledgers contain details for each of the individual accounts that constitute a particular control account, whereby the general ledger contain account information in highly summarized control account. Okay, here we will see the flow of information from the economic event to the general ledger. So remember, we mentioned about we have the example of sales transaction. We have the event is customer order. The economic event is start with document come from customer order, and then we will produce documents. After we collect the data, we will produce internal document called sales order, and this sales order it's kind of capturing that transaction, the customer order events, and then we will do the process of recording in journal entry in the sales journal. Then after that we will do the posting to the ledger, to the subsidiary ledger and general ledger. So in the sales order we can do also account receivable subsidiary ledger to the each account detailed in the subsidiary ledger. So then after that we will predictly reconcile the subsidiary ledger to the general ledger. Okay, after we discuss the manual recording system of the accounting or the financial event and transaction, let's say the flow and how the process of digital accounting records. So modern accounting systems store data in 4 type digital computer files. We have first master file, contain accounting data or the account data in general. And then we have transaction file, which is a temporary file of transaction records used to update data in master file. So transaction file is the temporary file. So after we post to master file, so this temporary file of transaction will be closed. Then we have reference file, stores the data are used as standards for the processing of transaction. Lastly, we have the archive file, contains record of past transaction retained for the future reference. So archive file is the record of the transactions file record in the past, and we can retrain it and recall it back to for the maybe for audit trial. So based on the archive file, digital record audit trails are less observable than the between the hard copy documents or the manual document file, but they still exist. So between the archive file and transaction file and master file, so between the three. But for reference file, it's about the standards and the role, the nature of the account recorded. Let's say the flow of the digital accounting records in a computer-based system in this figure. In here, we can recognize that the cylinder shape here, any cylinder shape, this one, this one, this one, all are representing database or master file to keep the data. So we have master file, which is this one, and we have the transaction file, temporary file, and we have the reference file, and we have the archive file. Okay, so the flow will start from the source of document of sales order. Then we will key into the system through the terminal of data entry. The first step to record the sales order transaction is in the transaction file of sales order, and then which is this file. Then later on it will process through the system to update the program. And when we update the program, we need to get some information from reference file to support the document, support the process of updating this transaction. And then we will update three or four files. First, first is the archive file, the general for the sales order file, and then we will update the subsidiary, account receivable, and inventory. And if it is another transaction about purchase, it will be the payable subsidiary account, and also the inventory or other account if related. And then update the general ledger. Also, it will update the error file if there is. Okay, so then we, as we mentioned, the trial balance, the trial audit process is representing here in the 4 steps by comparing the balance sheet with the general ledger data master file, and also compare. The second option is to compare the subsidiary account receivable files, which still consider master file, but is subsidiary, with the general ledger of the account receivable. As well as we can compare the subsidiary account receivable file or the inventory account receivable file with the archive file. We also can compare also the journal from archive with the source document. Let's discuss the file structure here. So we have two types of file structure in the database. One is the file structure. The file structure first is the one is the flat file model, describing an environment where the individual data file are not related to the other files, means separately filed. It is like the manual filing. Okay. The flat file model is, as we said, it is a separate file, is structuring the files of the database in a separate manner. This will lead to a significant data redundancy issue, which is part of the redundancy problem. It will create data storage problem, data updating problem, currency of information, and tax data dependency and data integrity. So all of these issues are related to the redundancy of data. So since it is filed separately and independent from each other, this will create a jam of data and huge data to be kept because it's redundant, and the update in one file may not be update all files recorded about the same information, and this data is not integrated in the end, so it will be a mess. Okay, so this is the example I give just now. That let's say we have information about customer data, and we have sales invoice and cash receipt. This is information being stored in the files of accounting segment, and the same information will be in marketing. We will have the customer data and the sales invoice, which is quite same here, but it's stored again here because it's related also to the marketing function segment. Product surfaces also will store the customer data history, the history and product orientation. Also will record the product surfaces. So if you notice here, we have this one and this one. This one is redundant. So this one is redundant in the three files or three functions, and this one is sales invoice is recorded twice. So this is kind of storage problem, and will create also another and it's not, the data is not same if we update, let's say the accounting update the file of the customer data of the current account, but it will not be updated in the marketing department and also the product service. Okay, so let's move to the other model of structuring the files, which is database model. A database is a set of computer files that minimize data redundancy and is accessed by one or more applicable program for data processing. So it means that we have data, database has been stored in computer files, and there is an applicable or software to process and manage the integration use of this data. The database approach to data storage applies whenever a database is established to serve two or more applications, organizational unit, or types of users, meaning that there is a multiple use of that same database or same files, but from different units of organization or different applications. So we have human resource application or software, and we have another software for accounting, another software for the warehouse and inventory. So all of these inventories will be connected to the database approach software, which will mainly serve to coordinate the database processing. by all of these softwares. So a database management system, DBMS, is a computer program that enables users to create, modify, and authorize database information efficiently. For the users here, we have different users using the application to key in and interact with the system, their specialized system, let's say accounting system, marketing system, and even product services system. So that will be key in into the DBMS for managing the same data and integrate it, and then key in the information to the shared database, which is the integrated database, or we call it centralized database. So, it's kind of separate two systems. One system, several systems is specialized systems according to the functions, which is those systems. And then we have one system, DBMS, is mainly to manage the interaction with the database. Documentation techniques is one of the techniques that applied in visualizing the flow of the process of any transactions or any accounting cycles or business cycle. So the flow start from, let's say for sales and revenue, start from sales order customer order, then to collection and so on. So we will visualize this process in a diagram and draw some symbol to show the flow of this transactions process and which department are involved in this flow of business process. It's also will represent and show the controls, the control or the internal control techniques. This documentation techniques is the main two types of documentation techniques is data flow diagrams and entity relationship diagram. Data flow diagram in the right side uses symbols to represent entities, process, and data flow and data stores, whereby the entity relationship diagram AR is a techniques used to represent the relationship between business entities. Okay, so since we are in Islamic University and we are a Muslim, it's good to bring some aspect from Islamic history to our topic or our subject. So for today, we talk about documentation techniques, and we say that the definition of the documentation techniques is to visualize the concept or the process of the business transactions into diagrams and so on. So this concept, it's happened in one occasion that the Prophet ﷺ used the draw to his companions to show them something, to explain what the value. He said this is the human, drawing in the floors in the center, and then he drew certain lines here. He said this is the circumstances and the things that happen with the human, and then he drew a square and said this is the death surrounding the human, and he drew one line out of this square and said this is the hope, just to show that the hope of human is beyond the death and beyond the circumstances happening to the human. So that the Prophet trying to say that we as a Muslim, we need to be realistic. We need to think about the akhirah, the hereafter, and not to keep hoping that our life will live, we will live for forever. So that is the concept, and the Prophet ﷺ trying to visualize this idea in drawing in the sand. So data flow diagram (DFD) used extensively by systems analysts to represent the logical elements of the system, but does not depict the physical system. Another diagram will explain that, will illustrate this. So here we have DFDS model systems processes. So let's see the samples used here. In the DFD flow diagram, this figure will show what is the sample. So the square sample with the shadow is show the input source or the output, the destination of data, whereby the square with round corner represent the process that is triggered or supported by data. And then we have the square open from one side, a store of data such as transactions file, a master file, or reference file. And the arrow it illustrates the direction of the data. So this figure illustrates an example of data flow diagram of purchase system. So purchase system, first we will have the review of inventory. So here we have the review of inventory, and when we want to review the inventory levels, we need to go back to check the inventory file, master file, or subsidiary master file for inventory to check the inventory. And then this one will goes to if we need to process purchase requisition or purchase order, we will go process prepare the purchase order. For preparing purchase order, we need to have information about the vendor's record, which is it will come from the master file of vendor's record. And then after we prepare the purchase file, one copy will be recorded in purchase order file, and then another copy, maybe hard copy or even soft copy, will be sent to the destiny, which is the purchase order. So by this DFD diagram of purchase system, it's clear, and we understand how is the process start and how it's finished, and what is the destination, what is the files that interact, either update or read only from that. Okay, so let's have some guideline for drawing the flow charts in general. You need to understand the system you are trying to represent. Identify business process, documents, data flow, and data processing procedures. Organize the flow chart so as it reads from top to bottom and left to right. So you need to start drawing, let's say, from left to right. So in or from up to down later, because we need, let's say, the destination, the final destination, which is the vendor just now, to be either in the right side or in the bottom, and the beginning to be in the left or the upper, just to show to have a good diagram. Name the element descriptively. you need to describe the elements, means the square, or you need to write something on it. So don't make it empty, leave it empty. So after we finish, you need to edit, review, refine to make it easy to read and understand, because sometimes you draw and you find that you need to draw something in exam. I believe you have no time, but maybe in the assignment you need to simplify as much as possible and make it readable. Now we move to the second types of documentation techniques: entity relationship diagram, ARD. The degree of relationship, or we can call it cardinality, is the numeric mapping between entities. And we have the sample of one-to-one, or one-to-many, or many-to-many. And we when we put in the relation one-to-one, we put it in 1:1, or 1-to-m mean one-to-many, or many-to-many. A data mode is a blueprint for a physical database. So what this means, so when we record it once, one-to-one means it's record once, it happened once. It's about the occurrence of that recording. So AR diagrams, system database, we will explain in here in this figure. Entity relationship diagram, samples. So we have here the input, here let's say the input, and also the destination. And we have one-to-one means it's each salesperson have one car. So we cannot assign the company car to two person. So it is one-to-one. So the recording of this transaction, it should be any car company should be one car company should be assigned to one salesperson. So it is one-to-one. So in here we have many to many, we're meaning that many inventory being supplied by many vendors. So it means that not specific items being ordered from specific vendors. We can have many list of items in the warehouse being ordered from many vendors, suppliers. Okay, so here we have the inventory, let's say many to many contains inventory, as I said, purchase order. Then we have many to one, we send to one vendors after we get, let's say, the quotation, and we agree in specific vendor, then we send the purchase order to one vendor. So what is the system flowchart? For system flowchart can be defined as the graphical representation of the physical relationship among key elements of system. Another definition which I like, I found it in Wikipedia, a type of diagram that represents the workflow or process. Very simple definition. So we will have this in a short while discussion. So the elements including department, manual activities, computer programs, hard copy, and digital accounting records will be representing in system flow chart. Also describe the physical computer media being implied, and the system flow chart will shows the processing of a single transaction only. So one transaction will be representing in the system flowchart, showing in this transaction the departments, the manual activities, the computer programs, and hard copy or digital copy, the type of record, is it digital or manual, and it describes also the whether this process is physical, computer, media, or it is manual. So those in this figure, it shows that what is the sample use. We have terminal shows the source or the destination of the documentation and process. We have the source of document here. We have the manual process. We have this is about storing the files, and we have this about the recording in accounting record, journal, and ledgers. Here, this sample is show the calculated batch total, and the small circle normally to it shows the connection between pages, and then we have off-page connector, and we have this to show the description of process or comments, and then the arrow is show the documents flow line. So here we have the flowchart system showing the areas of activities. So we have here, if you notice here, we have the sales department, credit department, we have the warehouse, we have the shipment department, and then we show each department what is the flow of documents in each specific departments or function segment. So in sales department, we have customer. Customer will send this customer order, and then we will manually process and prepare the sales order. And we will have it will show how many sales order the copies. We have 4 copies, and then these 4 copies, one copy will be stored in the file, and then one of the sales order will move to credit department to check the credit limit and history of the customer. Then they will in the credit department, they will process manually the checking the credit, and then they will read from the credit records of that customer file, and then after that they will send signed sales order if they approve the credit limit. Okay, so the samples used in the programming or the program flowchart is as follow. We have the hard copy. This one is for the hard copy, source of documents and output. The square is computer process. This one, it shows the direct access storage device, and then magnetic type of sequential storage device, terminal input or output, flow of the process. Here it shows the real-time online connectivity, and normally we use this one for the computer processing or automated processing. And then we have the video display device. Okay, so now let's say the same example of the system flowchart just now we see for the example of the sales transaction. Let's say the same example of the programming or the program flowchart showing the transaction of facts 1, 2, and 3 into visual samples. So we see here we have the customer send his customer order in manual, and then we key in a terminal input order here, and then this key in will goes to 2 ways. One is to keep the customer order and record it in the file within under the sales department, and then we'll send this input of order to the computer to process computer operation department to process the and edit the credit check. So to check, they will check the credit history file database, and then they will produce a sales order, and this sales order will be update will output the update program to account receivable file and inventory if the process go on. Okay, so then we have the for the warehouse. If agreed, then we will send the sales order. One copy will send to the warehouse to prepare the sales order, and then it will be manually pick up the goods from the shelves of the warehouse, and then update send key in into a terminal to update the stock the stock records that will be keep in the database of the stock record, which is transaction record, and then it will be sent to the shipment department. Shipment department, we will send one sales order from the computer operation department, and also one of the warehouse will be sent to the ship of goods, and they will process it and to send the goods as well as the shipment document. Okay, so this is in more details, just explaining the same things, but for the program flowchart, it is providing potential details for every program representing in a system flowchart. And sometimes the accountant use it to verify the correctness from program logic. It means it shows the logic of that flow of the operation. So this diagram show here in the upper right of the slide, it shows that let's say lamp doesn't work. So if the lamp doesn't work, this is the let's say the operation. So diamond sample, it represents the decision. So what is the decision? We have two options. One is to plug in lamp, to plug in the lamp to on the lamp. Other decision is to go to another decision is pull up the burned out. So is it inside? We need to check if the bulb is burned out. If the bulb burned out, then the decision is to replace the bulb or to repair the lamp. So we have two decisions. It shows the flow or the logical flow of the program. Okay, the process. Okay, so programming flowchart samples is the logical process is the square, then the diamond is about decision, and terminal start or end operation, and then this sample is for input output operation, and then the arrow is for the flow of logical process. Okay, so here we see the flow, as we say just now. It shows that there is a starting and ending, and we have the here we have the read record documentations, the documents or the information, and then we have the decision diamond sample, which, as we said, it's based on 1 or 0 or yes or no. So if yes, then we stop, we already check, and it's okay, then we stop checking, and if not, then we need to have error. We mark the record of bad record of that customer. If not, then we go beyond that. this figure showing the database system flowchart. So in here is we start with sales order database, the cylinder symbol show the sales order start by key in this data, and then the system will edit this. So we have either if it is error, then we will keep it in the file in this also database errors file. If it's okay, then we will go to the edited transaction, and then updated also the updating process to the master file, and as well as the edited transaction file to generate in the end the documents like the shipment documents, or the billing and invoice documents, or the report about the customer monthly statement, or even updating the ledger of account receivable and so on. Let us now discuss the transaction processing models. We have two models for processing the transaction. One is the batch model and the real-time model. Information time frame based on the time, because the difference between real-time and batch is based on the information time frame. So for batch system model, assemble the transactions in groups, then key in one time. So this one will result and cause in a time lag or delay, whereby real-time system process the transactions individually as they occur with no time lag or delay. This diagram or this picture is illustrate how the batch processing process the transaction with late time or lag time, and we can see that the employee will key in the information, but not necessary to be the same time of the occurrence of the transaction added to the system, whereby the real-time processing, the information being updated to the system automatically in less than 1 second. The balances. Okay, so this diagram just to show the batch system, how the batch system is recorded. Here we have transaction recorded in different time and different branches or BC, and then it will be accumulated, then key in or record through the batch system, and then update the master file of that transaction. Here we will compare the two models of processing the transaction, the batch system as well as the real-time system. So for in terms of resources, batch system require a fewer organizational resources in terms of hardware, staff, cost, programming, and training, because if we want to record the transaction based on the real time, we have, let's say if we have 100,000 transactions a daily, one or two staff with one or two laptops or PCs is not enough. So they need more resources, organizational resources to key in. Whereby for the batch system, it's not requiring that, because we can do it along the month or the week. We will do it not necessary in the real time or of the transaction occurrence. In terms of operational efficiency, we need to say that for the real time is more efficient, but we need to think and analyze the cost and benefit of that. So compare the efficiency and effectiveness between the two models, because batch processing of non-critical account or elements unnecessary activities at critical point in the process, meaning that there are some transactions, it's not critical, it's not very important to update it in real time. So this one can be processed through the batch processing, whereby some they need to be it need to be processed in real time system. So which transaction model is more effective, batch or real time system or model? The popular approach that capture and processes some aspect of transaction when in occurs and other aspect in batch model. In updating master files from transaction involves changing the value of one or more variables fields to reflect the effects of transaction in a batch or real time. So it's called updating. Okay. Master file backup is a standard procedure to maintain file integrity in the event that first an update program error corrupts the master file being updated. Undeducted transaction errors result in corrupted balances. The thirdly is a disaster vehicle destroys the current master file. So we need to ensure that the master file has been backup, and we will discuss this in the control system, internal control system. As part of safeguarding the assets and of the information. In transaction processing model, whether it's batch or real time, it's good to know the structure of the recording structure. So here we have in this figure, we have three files: the sales file, inventory, and account receivable files. And we have here the PK is the primary key, which is, we call it the key information in this file. And then we have the secondary key, which is data that it's okay to be empty. It's not the main information or the key information in that file. And we can see the connectivity or the relation between other files. So in the file of sales, the sales order number is the key, primary key record, whereby for the master file of account receivable, the primary key information or record is the account number. So account number is it is in the it's also recorded in the sales order file, but as a secondary key. And same thing goes to the inventory information, which is recorded here and as a secondary information, but it is for inventory, it is inventory numbers. Later on, we will discuss the relational concept of the database later on, I think in a few chapters later. Here we see the sales department and the computer operation department, how they process recording transaction based on computer-based concept. So based on real time here, we can see it's real time. So customer will update the sales order and update and key in the information through the terminal of data. Then it will send a real time in the same time of occurrence of the sales order to process through the system. So remember the zigzag arrow, it represents the real-time process. So processing data, import and edit the program. So we have here read and write, read and update the inventory subsidiary account, and only read from the account receivable subsidiary master file, and then updating the sales order. Okay. Okay, let's say now the completion of the transaction or the flow. So then after, if we do, we do it in real time up to this point. Up to this, updating the sales order is based on real time. But the rest of updating the process of updating updating and reporting program, in terms of sending to the updating the sales journal and updating the general ledger accounts, and also sending the users documents. All of this is process is based on batch process. So that's the how the system will apply the approach of integration between real-time process and batch process model. Okay, so here we have example of real-time processing of sales order, and we can see here everything is based on real time. So we can see more zigzag arrows comes from the customer order here, and then checking the credit and the inventory check, and we can see that we retrieve information and update the inventory, the credit file, we just retrieve the information there, and then we when we update the open sales order, then we also update the subsidiary account control accounts and so on. Now we will talk about the new topic, which is quite interesting because for your information, I think somehow it is quite common sense now that the program system or the software of accounting or any account, the computer language is not based on what we are handling now. Let's say the alphabet or something is based on 01 code. The codings means transforming the data into a form suitable for the computer aided analysis, meaning that it's transformed to be codified to the computer language, which is the Cotamus 01 numbering in general. Okay, so data coding schemes have advantage of data coding. One is consciously represent large amount of complex information that would otherwise be unmanageable. Two, the second advantage is provide accountability over transaction completeness, identifies unique transaction and account within a file. Then next, supporting the audit functions by providing an effective numeric groups codes are used to represent complex items or events involving two or more pieces of related data, meaning that the numeric or the numbers group is used to represent complex items, let's say the alphabet statements. Other than that, in the system or the computer language is based on the numeric groups or numeric forms. It will help using this method or this language of coding facilitates representation of large amount of diverse data, allows complex data to be logically represented, permit details analysis and reporting, but the disadvantages are overuse, which can increase cost and linking of the unrelated data. So this was the data coding schemes is not our main topic here. We are not in programming language class, but it's good to have some link, some information about it. Okay, so by now we finished the second chapter, which is covered a few main subtopics. First, we discussed the TPS, the transaction processing system. We discussed the two or the three accounting cycles, the expenditure cycle. We discuss also the process, the conversion cycle, and the purchase cycle in brief. And then we moved and discuss the database, the difference between the file, the file structure. We have the flat file and we have the database management or administration. And then after that, we discuss also the processing of transaction. We discuss also the documentations techniques. We discuss the coding scheme, and that's all about today class. I hope you have get some new knowledge by now, and we will have a live discussion inshallah when we meet next week. Thank you.